Market boom, Nasdaq and S&P 500 hit record highs, Netflix earnings and 4 breakout stocks. The Nasdaq and S&P 500 have surged to unprecedented heights, and amidst this financial excitement, there are 4 standout stocks that investors should keep an eye on, especially following Netflix's impressive earnings report. It's crucial to understand that the information provided by Investors Business Daily is intended solely for educational and informational purposes. It should not be interpreted as an invitation, recommendation, or endorsement to buy or sell any securities. The data has been gathered from sources that we trust to be reliable. However, we cannot guarantee its accuracy, timeliness, or appropriateness. This includes any information that may appear in closed captioning. It's important to note that past investment performance does not guarantee future results. Additionally, the authors or presenters may hold shares in the stocks they discuss. We do not make any claims or warranties regarding the wisdom of investing in specific securities or employing particular investment strategies. Please be aware that the information can change without prior notice. For more details about our services, please refer to our terms of use. Real-time pricing is provided by Nasdaq Last Sale. Please note that real-time quotes and trade prices may not be sourced from all markets. Ownership data is supplied by LCG, while estimate data comes from FactSet. Investors Business Daily, along with its various platforms such as IBD, IBD Digital, IBD Live, IBD Weekly, Leaderboard, Market DM, and Market Surge, are all trademarks owned by Investors Business Daily, LLC. Copyright 2025 Investors Business Daily, LLC. All rights reserved. Wall Street's record-breaking week. What you need to know. Wall Street wraps up a remarkable week with a surprisingly subdued close. A quiet end to a record-breaking week. The S&P 500 index experienced a slight dip of less than 0.1% after reaching an all-time high just a day earlier. This marks Wall Street's third week of gains in the past 4 weeks, showcasing a resilient market despite the day's modest fluctuations. The Dow Jones Industrial Average saw a decline of 142 points, translating to a 0.3% drop, while the Nasdaq Composite managed to inch up by a mere 0.1%, contributing to its own record. Merger talks and market movements. In a notable development, Norfolk Southern stock surged by 2.5% following reports of discussions with Union Pacific regarding a potential merger that could establish the largest railroad network in North America, linking the East and West coasts. However, such a merger would likely attract significant scrutiny from U.S. regulators, which adds a layer of complexity to the situation. In contrast, Union Pacific stock fell by 1.2%. Netflix's unexpected decline. Despite reporting profits that exceeded expectations, Netflix's stock plummeted by 5.1%. Analysts pointed out that this drop was not entirely unexpected, given that the stock had already skyrocketed by 43% earlier in the year, outpacing the S&P 500's growth by 6 times. American Express and ExxonMobil's struggles. Similarly, American Express reported better than anticipated profits, yet its stock fell by 2.3%. Analysts noted a slowdown in certain growth metrics, such as the number of new cards issued. ExxonMobil also faced challenges, with its stock dropping by 3.5%. The company had been contesting Chevron's $53 billion acquisition of Hess, but a recent arbitration ruling in Paris allowed the deal to proceed, causing Chevron's stock to decrease by 0.9% after an initial gain. Positive earnings reports boost some stocks. On a brighter note, several companies benefited from stronger-than-expected earnings reports for the spring season. Charles Schwab's stock rose by 2.9%, Regions Financial jumped by 6.1%, and Comerica added 4.6% to its value. Market summary. Overall, the S&P 500 closed at 6,296.79 points, down by 0.57. The Dow Jones Industrial Average ended at 44,342.19, down 142.30 points, while the Nasdaq Composite rose by 10.01 to reach 20,895.66. Bond Market Insights. In the bond market, Treasury yields eased following a report indicating that U.S. consumers may be feeling less anxious about impending inflation. According to preliminary results from a University of Michigan survey, consumers are now anticipating inflation to be around 4.4% over the next year, a decrease from the previous month's estimate of 5%. This shift is crucial, as high inflation expectations can lead to behaviors that perpetuate inflationary cycles. Consumer sentiment, while slightly better than economists had predicted, remains significantly below historical averages. Joanne Su, the survey's director, stated, "Consumers are unlikely to regain their confidence in the economy unless they feel assured that inflation is unlikely to worsen, particularly if trade policies stabilize in the near future." The yield on the 10-year Treasury bond fell to 4.42% from 4.47% late Thursday, while the 2-year Treasury yield, which closely follows the Federal Reserve's short-term rate expectations, decreased to 3.87% from 3.91%. Federal Reserve's future moves. In a recent statement, Federal Reserve Governor Chris Waller suggested that the Fed should consider cutting its overnight interest rate in the upcoming meeting. This comes in the wake of criticism from President Donald Trump, who has been vocal about the Fed's decision to maintain steady interest rates this year instead of implementing cuts as seen in the previous year. Lower interest rates could potentially stimulate the economy, and Trump has hinted that they might help the U.S. government reduce its debt servicing costs. However, the relationship between interest rates and government debt payments is complex, as longer-term rates are often influenced more by investor sentiment than by the Fed's actions. The Fed chair has emphasized the need for more data regarding the impact of Trump's tariffs on the economy and inflation before making any decisions. While lower interest rates could invigorate the economy, they also risk exacerbating inflation, which may already be feeling the effects of tariffs. Market traders are increasingly leaning towards the likelihood of the Fed resuming interest rate cuts in September rather than later this month, according to data from CME Group. Global market trends. Internationally, stock markets displayed mixed results across Europe and Asia. The Hang Seng Index in Hong Kong surged by 1.3%, while Japan's Nikkei 225 experienced a slight decline of 0.2% ahead of an upcoming parliamentary election that could potentially alter the ruling coalition's majority in the upper house. Final thoughts. As we reflect on this week, it's clear that while some sectors are thriving, others are facing significant challenges. What are your thoughts on the current state of the market? Do you believe the Fed's potential interest rate cuts will have a positive impact? Or do you think they could lead to further inflation? Share your opinions in the comments below.